It's not on.
Good evening, everyone. If I can ask everyone to sit. Good evening. Thank you very much for being here. We're still waiting, expecting some 10 more people. I'm Alessandra. I'm one of the founders of FinTech Belgium. I am now a board member of FinTech Belgium. Someone has taken over the role of CEO, David Jacob, that you might have met at the first drink. He will be back. So really happy to see this room. First, big thank you to Osborne Clarke to host us in this beautiful place. I didn't know it, and I'm from Brussels. And also Mifundo for supporting us. Without partnership, without support, we would not be able to organize these events. So if you want to support us as well, if you have a room, if you have, you're interested in a partnership, please get back to us. So I'm going to start straight away. We are tonight going to talk about a very, very hot topic, full of opportunities. I think also a lot of challenges in front of us. And about the financial data access, which is a framework that the European Commission is preparing and working on. We know already certain things, so we're going to start. I forgot my clicker. So we're going to start by seeing a little bit what we know about it and trying to decipher whatever we know about it and what to expect. It will be given by Osborne Clarke, Jean-Christophe. Then we will have first-hand experience from the European Commission. We're going to see also what maybe the objectives, what the goals are, and also a little bit more maybe to what to expect. Then it will be Gundar Ostrovskis, and I think I did it. Yeah. And then we will go on with, as I mentioned, a lot of opportunities, a lot of challenges. How are the insurance companies seeing FiDA? We have someone also first-hand representing the industry from Australia, Hadewig Van Alst, and then we will have another point of view, which will be more the fintech point of view. So we will have Isabel Group and Mifundo explaining a little bit more like, maybe how to switch to FiDA, for going from open banking to open data. And then Mifundo, I hope, is going to bring us in a little bit more into the future and see what to expect a little bit more in terms of applications. And then we will go into a round table. So please keep your questions for all the speakers. They will be sitting in front of you. The only person who's going to have to leave is Gundar's. So we will add a Q&A, a 5-minute Q&A before he needs to leave, because he needs to leave right after his presentation. So this will be the only questions you will be able to ask before the round table. So without further ado, Jean-Christophe, can I invite you?
Thank you, Alessandra. Okay. Good evening, everyone. So tonight we're going to speak about a topic that is actually very dear to me, but also for us at Osborne Clarke. It's about the financial data sharing within the financial sector and the proposal FiDA, so Financial Data Access Framework. It's a proposal of regulation. Most commonly within the sector, the FiDA regulation refers to a concept that is called open finance. And so open finance, what is it? It's the access of financial information that is produced by financial institutions for financial services users, and this access is granted to third-party service providers to provide new types of services, whether it's financial services or information services. In the approach of open finance, it requires, at least at first, that data is collected, processed, and to some extent created from users of financial services by financial institutions at the first stage, and then at the second stage that this data is being made available to third-party service providers who will use this data for a purpose that within FiDA is very limited and to provide these new types of services. But to guarantee that access, to guarantee that data sharing, you need to make sure that you have the right conditions for sharing this data, to have access to enough data, and that this data sharing is being done in a very secure way and hopefully for the business very seamlessly and efficiently. But up to now, this can be quite theoretical to some extent. I mean, there are legal and technical difficulties for granting that access and to make sure to tap into the potential of open finance. Up to now, at least in Belgium, if you look into legal opportunities, you have few regulations, a few laws that you can potentially use it, but it's quite restricted. So first of all, you all heard about the GDPR, so I'm not going to get into the details, but somehow there is a right to direct portability from business to business, but that right is very theoretical and hardly very operational because it's left to a lot of interpretation and nobody's using it. So if you want to really access financial data, either you have some sectoral regulations, which is the PSD2 and open banking, either you have basically just contractual basis, because otherwise, if you don't really get into a contractual agreement with banks or other types of data holders, as we call them, well, at least in the EU, it can be considered as hacking, actually, and so you're risking criminal proceedings. So, about PSD2, what I wanted to say is, first of all, I remember when I first started to joining meetups from FinTech Belgium, it was about 7-8 years ago, I think. There was this meetup about open banking and PSD2, and a lot of people were super enthusiastic about it. They were saying it's going to change the financial world, and they were using this phrase. It's kind of a gimmick. They were saying data is the new gold. So I'm not sure if it has completely changed the financial world right now. Incumbent players are still there. I'm still thinking the quality of our financial services are better. But still, this gives an idea of the enthusiasm that was about open banking. However, few years later, now that PSD2 has been implemented, that we've seen how open banking is working, what are the provisions, we've also seen the limitations of open banking. First of all, because the data that you can access is very limited to payment account and payment transaction. And second is that actually the technical implementation of these provisions is very complicated. You need to ensure that the access to that data is secure. You need to grant access in real time. You need to make it efficient. And there's as little friction as possible. And to do so, you need to comply with a lot of regulations, a lot of requirements, and one of the main discussions about that was how you do it. And PSD2 said, well, to do so, you need to use what we call APIs. And for those of you who do not know what is APIs, well, I'm going to tell you what I found the first time I looked up on APIs on the internet, and actually that's quite funny. The first thing I saw about API on the internet is this phrase which says, APIs are like prayers. You ask stuff through them. And so it's not very telling. So I hope maybe this representation is down to you. And APIs is basically what you see here. It's the interaction between the TPP and the bank to access that information. These are basically application programs that work as platform and interface channels for two entities to communicate between each other. Here it's third-party service providers and banks. And This essentially allows for information to be shared in a secure manner efficiently, theoretically. And in the context of the open banking, it allows third-party service providers to request access to some data. And that's why you say it's like prayers, you ask stuff through that. Thing is, that obligation was for banks. So they had to develop computer programs to grant that access in a real time, frictionless, and obviously this was very costly. This was a lot of eyebrows, and you're supposed to do so to open up your books to competitors. So as you can imagine, it was not very smooth process. And as time passed, both third-party service providers and banks were scratching their heads to know how to comply with different requirements, how to make sure it's okay, how to, for some side, try to restrict the access, to the other, try to expand the access. So that was a real headache. And also, as we've seen with the developments, at the end, the restriction of data you can access was also somehow hindering the innovation that you can see in the financial sector. So at the end, there were a lot of questions, and although we had seen a whole broad of new services and new financial services, you could see that somehow innovation within the financial world was brittle somehow. And now fast forward to FiDA and Open Finance. What we're seeing right now with the FiDA regulation is that it's trying somehow to correct some of the wrongs, I would say, but it's not really wrong, but at least some of the issues we had with the open banking. So it's trying to broaden the scope of data that can be accessed. It's trying to streamline data sharing through different processes, at least with monetization principles. I know Kundal is going to explain that a bit more, but so at least trying to have the costs more fairly borne by banks, but also third-party service providers who are trying to access the data. They're trying also to standardize the data. I have not talking about that, but the thing is, there were no standards for the format in which data should be shared, and so you can see that this proposal is trying to also change that, and it's trying to also organize the industry relationship through what they call data sharing schemes. And once again, I'm not going to get into the details, but that's, I think, a very interesting initiatives from the Commission. At the end, also something I want to add is FiDA is trying to set the scene, trying to have the right principle for data sharing, fostering innovation, trying to share the burden of development costs evenly and fairly, but also actually developing new financial services, not just about accessing financial data. So you may want to have a very interesting business case about a new innovative product, but actually you might need non-financial data. And for this, you can see that the Commission is actually trying to also develop that. So looking at the proprietary works of FiDA, you can see that they're trying to look into every type of data access right you can have and trying to foster that. So I see that I'm already too long. So quite quickly, I just want to, in words, say who we are actually. So Osborne Clarke, it's an international law firm. We have many specialists in fintechs, and we have actually a particular focus on sectors about technology, data, and financial services. And we're trying to gather the right specialists to have the right discussion, provide the right advice. What's interesting is we can advise scale-up startups, and we can help them internationalize also their services. So we like our clients, and we don't want to say goodbye when they go to another country, and that's luckily what we can do with our colleagues. Finally, what I really like about our firm is we're also trying to be innovative because we work with innovative clients. So we're trying not to just provide our advice in boring PDFs and Microsoft Word documents. We have a spin-off which is called Osborne Clarke Solutions, which is actually helping us developing new tools to provide services in a different way, in delivering our value in a more client business friendly way, I would say. And so it's not just words. Every day I'm using actually OC Solutions tools to provide my advice, provide a way we provide services. I think it's nice to think about a firm where we don't just advise on innovation, but we're trying to innovate ourselves. And that's it for me. Thank you.
Thank you.
Thank you very much. We certainly have more questions later on. Next speakers on. Gundars, the floor is yours. The presentation is coming up.
Thanks a lot. Perfect setting of the scene, Jean-Christophe. Thank you. Thank you very much. So I'm Gundars Ostrovskis. I'm from the Digital Finance Unit of the DG FISMA, which is the Financial Services Department of the European Commission. So we actually drafted this proposal for regulation on financial data access. So now I will briefly introduce it and explain the logic behind it. So actually, you have to be aware that, for example, data sharing under PSD2, when it comes to payment accounts, was really ahead of its time. And that was a kind of a self-standing initiative. Whereas here today, actually, we have a whole EU policy framework in place, which extends across all sectors of the economy, so not only finance. And this is, of course, this European strategy for data, which was adopted in 2020, so 4 years ago. And that strategy envisages a cross-sectoral framework, legal framework for data sharing in the EU, and also the establishment of the so-called common data spaces in the various sectors of the economy. So these piece of legislation that you see there, the Top Data Act, Digital Markets Act, Digital Services Act, you may know, Data Governance Act, that they are kind of horizontal piece of legislation, if you like. And then you have the common data spaces, where you have health data space, industrial, energy, and so on. And of course, you also have the financial data space, and actually FiDA fits perfectly into this EU policy framework, which actually at our level of DG FISMA is also shaped by the digital finance strategy, which was also adopted in 2020. So we also have the European single access point, as you may know, which is giving access also, or automating access, or enabling machine-to-machine access to public disclosure data of firms. We're also working on supervisory data strategy, and the FiDA proposal clearly deals with customer data in the financial sector, as was already explained by Jean-Christophe. The broad objective is to improve the economic outcomes for both financial service customers, but also financial sector firms, by promoting digital transformation and speeding up the adoption of data-driven business models in the EU financial sector. Some more specific objectives are to give customers meaningful control over their data in the financial sector, and on the other hand, enable effective access to this data for third-party users that serve these customers with other types of services. So that requires the obliged data holders to share this data with third parties. That also requires standardization of these data sets, and also putting in place some incentives for the implementation of high-quality interfaces to share this data. So it's very important actually to stress that what we're after, it is machine-to-machine data sharing. That's why we need APIs. We need the possibility of two applications communicating directly with each other without human involvement. So that's really the technical objective behind FiDA, and also it was the case behind data sharing under PSD2. At the same time, we have taken a very different approach. On the one hand, indeed, learning some of the lessons with implementation of PSD2. On the other hand, you also have to bear in mind that FiDA covers an extremely broad range of financial services, and thereby a very broad range of data sets with very different levels of digitization, and involving also very different types of data holders, big firms, but also very small firms. Therefore, we really had to think very hard about what would be the right approach to go forward beyond payment accounts. And we have actually come up with a pretty different approach, if you like. Because whereas PSD2 data sharing is non-contractual, so basically you have an API and anybody can call the API in terms of ASPs. Of course, you have to kind of identify yourself, but you don't have a contractual relationship with the data holder, and this concerns both read and write access. That means that you not only can get information, but you can also initiate transactions in PSD2, so you can initiate payments. So first you can pull information and you can show to the customers, for example, that relatively speaking, on the market there are products maybe which are better tailored to their needs or which are cheaper, and actually you can also encourage the customer to act on this information, and then you can initiate these transactions, which is not the case under FiDA. Under FiDA, it is only read access, so it's only pulling the data so that it can be read, and it is contractual data sharing via schemes. So we have invented this new mechanism of data sharing schemes, which actually requires data holders and data users to become members of these schemes. So it is actually mandatory membership, and the purpose of that is to have them at the same table and have them agree on the modalities for the data sharing. There was strong customer authentication for PSD2. Again, the main reason for that is transaction initiation. If you can initiate payments, you need strong customer authentication. This is not the case under FiDA because it's only read access. However, FiDA also requires all the firms that are data users to be subject to the Digital Operational Resilience Act, which is our cybersecurity legislation. So market-driven common standards are supposed to be developed via these schemes. These schemes also allow for compensation to data holders for enabling third-party access. This is also one of the lessons learned from PSD2, but also it follows the general principle introduced by the Data Act that indeed the data holder should be eligible for compensation. And then, okay, there's also rules. There's supposed to be rules on contractual liability and dispute resolution mechanism. Just very briefly, what types of data? So, I mean, basically very broad, as I said, investments, insurance, pensions, loans, mortgages, savings, all types of financial data beyond payment accounts, both individual and business customer data, and clearly, therefore, also personal data and non-personal data. So the expected solutions stemming from the obligation. So we have Article 4, which actually requires the data holders to make the data available to the customer itself without undue delay, free of charge, continuously in real time. There, logically, the expected solution should be a customer interface. Again, we're dealing with a lot of data holders under FiDA who may not even have a customer interface today, because we're not talking only about banks. And the Article 5, which is about sharing data with third parties, so sharing this customer data with third parties, of course, importantly to note, only by customer request, so the customers actually have to request and approve that this data access is granted, and there it's the APIs, of course. Some of the opportunities that we expect, clearly when it comes to incumbents, as I said, digital transformation should improve customer experience. Where there are no interfaces that would be put in place, the data sharing both inward and outward should become easier, and that actually should also enable the incumbents to act as data users and to offer new data services on par with new entrants. So with this list that you have on the other side, which includes product comparison, aggregation, data aggregation, or related advisory services or ancillary business services. So there's, let's say, a lot of opportunities. And finally, the last slide on the timeline, just to say that the Commission has proposed that 18 months after entry into force are taken for the marketplace to get together and establish the schemes and work out the modalities, and then 6 further months to put in place the APIs and make them operational. Now, of course, the proposal is at the stage of negotiations with the co-legislators, and the Econ report already extends that timeline, and the council actually wants to go in phases depending on the type of data, and then the last phase you see would even extend up to 48 months, which is twice as long as the Commission proposed. I will stop there. Thank you.
Thank you. Now there's time for one question. Who has the best question? Sure? Yeah? Oh, there's a person behind you. I'm sorry. If I can ask you to stand up. Yes, so that everyone sees you.
Hello, my name is Bastian from LinkedIn. So we are linking financial data from source to destination. So we are just in the topic. How close is FiDA from PayPal? Because PayPal is actually putting in place a standard way of communicating financial data. So, yeah, how close is PayPal from FiDA?
I'm not sure I'm aware of this.
So PayPal is an initiative from the EU, European Union, enabling invoices, orders, stock movements, and to transit from one actor to the other. So it's, in my opinion, quite close from the topic here. So how close is PayPal from FiDA?
You're not talking about consolidated tape, no? You're talking about something else.
Yeah, invoice.
I'm talking about invoicing, ordering.
I'm very sorry, but I am just not up to date on this proposal. So probably it's developed by another DG.
Yes, no worries. You had a question.
Just a quick question. When do you think the full report will be done? By when?
The report in
The full draft, because now it's the draft version, I believe.
well, I mean, there's a proposal, and then there's the European Parliament's Econ report, which was adopted in April. So that one is available publicly. And then, of course, the Council Working Party is working on a text which is not publicly available. But there, I think that's the normal practice. I think the text that will become available from the Council will be the general approach, I suppose. That's what it's called. So basically, once the Council agrees at the first stage on their position on this piece of legislation or the proposal, that is called general approach, and we expect that should be the case before the end of this year. So, but again, that only will be clearly the Council's position, and the Parliament will continue the work. So we're not going to see any kind of final text or draft before, I don't know, next summer, I suppose, because the two co-legislators will still continue their work in scrutinizing this proposal. Well, to be adopted, I suppose it should be next year, probably after the summer, but yeah, not before, for sure.
Thank you very much. It's
Thank you.
31.
Thanks a lot.
Thank you very much. So now, as Soraya had a week, we are going to hopefully hear about everything, how you see, how the insurance companies see FiDA, opportunities, challenges. The floor is yours.
So, yeah, you can hear? Okay, great. So I'm going to start on something already touched upon, the European policy cycle. I'm not going to go through it again because it has already been explained. But what is FiDA regulating in the insurance sector? Well, for the insurance sector, as it has been explained, FiDA is when a customer will request that its client data, its customer data, is being shared with another financial entity. So this can be an insurance company, another insurance company, or any other actor in the financial sector. And what is really new is that it introduces a new type of actor, which is called the financial information service provider. And we think this will be very disruptive in the insurance sector. And information services allow customers to make informed decisions about the insurance products that they are buying. And today, they already do informed decisions, but in a different way because different rules apply. So here there would be more tech-related solutions to inform the client about our products. So we expect a disruption in the insurance sector, and we also think that the interactions between the insurance companies and the client and also the wider ecosystem, because they're not just insurance companies in the wider ecosystem, they're also reinsurance companies and intermediaries. All those relations are going to change. And today, one key concept in the proposal is customer data, because that is what is being shared. And that data is quite broad. The sector thinks it's a bit too broad, because we're afraid and worried that it will include sensitive customer data. And so, for instance, we believe that data that is related to health should not be shared. And also, we think that FiDA should only target retail insurance products and not B2B insurance products. And then there are other types of data that we think should be excluded because they include trade secrets. And data is gold for the insurance companies because it allows us to assess risks and it allows us to calculate the premium and it allows us to make sure that if there is something bad happening to several people, they can get compensation. So we think that if a lot of data is being shared, the business model of an insurance company could be understood way more than it should be, and this will eventually also reduce competition. So we believe it shouldn't be shared, and there is a safeguard in the Data Act that can prevent data sharing in these cases, and we think this should be taken over in FiDA. And who is FiDA regulating in the insurance sector? Well, the insurance companies, the insurance intermediaries, some pension providers, but we will see how this goes, the financial information service providers, I already explained, and of course, the insurance customer. And what do we expect? We expect that there will be a broad network of insurance stakeholders that are continuously exchanging data, because that's not the case today. It's not in real time, it's not continuous, and it will be a decentralized framework. And another point is that the customer data exchange will be uncertain, meaning that the customer can always withdraw its consent. And this can be quite problematic because for insurance companies, it's very important that all the data we have that we use to calculate the risks and the premiums and so on, they always are of the best quality. So it should always be accessed. In a way, we need certainty. And then there is another worry. There is a worry about an equal level playing field. And what does it mean for the insurance sector? This means that the same activities creating the same risks should be regulated by the same rules. And there are different actors in the legislation that are subject to different rules. And the FISP, for instance, they generate and they collect data from a lot of different sources that the insurance companies don't necessarily have, but they can also access financial customer data. And this will be an unfair competitive advantage if it's not regulated well. And so who should FiDA not regulate within the insurance sector? So I'm starting with the pension tracking system, which already exists. In Belgium, it's mypension.be. I think most people know what it is. So it's an already existing tool, and we believe it should stay because it already exists and it works. And it should also not cover actors that are not directly in contact with the clients, because we're talking about customer data, and the customer has to give consent, right? So it makes no sense that reinsurance companies that insure the insurance companies should fall under the scope of FiDA. And the sector is also feeling, connected to the level playing field, that we miss out on opportunities, because the data within the financial sector is going to be shared, but not the data coming from other sectors. But it's the data that is coming from other sectors that could allow new solutions, like preventive options. So, for instance, what data are we talking about? We're talking about data held by vehicle manufacturers or the energy sector. Maybe one concrete example, if we could get data from a flight being delayed, then an insurance policy that covers this delay could repay, the payout very quickly, like as soon as we know that the flight is delayed, actually. So these type of innovations, we are missing out on it. And this could be very innovative for the customer, but also for the insurance sector, and also for all the other sectors involved. And then we also think that innovation has to be conditional upon customer demand. So today we're not sure that there is a demand for some sort of data exchange, but the insurance companies will have to invest a lot because they are data holders, and they get reasonable compensation, but they only get it if there is a demand. It means that we will have to make a lot of costs without knowing if we're going to get a return. So I think I'm going to close my presentation on this. If
you have questions, please keep them for the panel. Thank you so much. It was super interesting. Thank you. Next person on stage from Isa number, the only one.
It's without a group now.
Yes,
I'm not sure that I will give you the answer on what we're going to do or what kind of innovation. Actually, I decided today more to do how we are going to do it. It's not Isabel Group anymore, it's Isabel, so it's not set outside, so I'm dry running my presentation with you. It's because we have sold, you have maybe read it in the press, a part of our activities or the accountancy activities, and we want to focus today on the banking solutions. And one of the beliefs that we have at Isabel, or the way that we are reinventing ourselves, we're not maybe a scale-up, but maybe a phoenix that's reinventing ourselves, is that the power is in the ecosystem. I think it's a very nice way also that was presented between PZ2 and FiDA. And what we will try to achieve is being a node within that ecosystem. So we believe that indeed sharing information, sharing the money flows that we're doing for almost 30 years, we're also now focusing on the data flows. This needs to be done in the correct way. There is a lot of legislation. We were talking about DORA. There is NIS. There is PZ3 coming up. So I think the list of legislation is very long. And it's a tough one, but it's very important to be sure that what's happening at the banking side, that we can leverage upon that and put it on the world of the fintechs and the new innovation in the right way. So that's the place that we want to play. That's the nodes that we want to play in that ecosystem. And we will do that actually through 3 strategic pillars. The one that is, of course, payments and account information, where we have our open banking solution today, but also the previous version of open banking with the Isabel 6, the one that is the most known at Isabel. But we're also investing in two other pillars. One is verified corporate data. So there we're not talking about financial data, but it's more data linked to the AML legislation, anti-money laundering. And then the third one is just services. It's not about know your customer, but know your transaction. And why these are all links is because, of course, it's about making the right payments to the right persons on the right way. It's a very complex ecosystem. So I like the question about the people. I didn't think about people and FiDA and how to link them, but it was a quite interesting question. And how are we going to link all these elements in the new worlds we want to live in? And we think that we have to go embedded first, because our customers today are not looking at the bank interface anymore. We know that there are on a daily basis in their CRM, in their software packages where they have other type of information. They don't have data, they sometimes have information of insight. So I think it's all about collaboration and about the ecosystem. So what are we going to do with FiDA and how are we going to implement it? Actually, I don't know. It's more an invitation, like let's discuss it together. Let's see how we could help and where we could help with the different products that we have. We want to build community-powered solutions because we think that's the only one that will work. Collaborating also with the right partners. There are very good companies that have information or have the knowledge about in AI, or is it confidential computing or other type of technologies. I think it's in the mix that we will find the right solutions, and also looking at together the different sectors, because what the insurance sector is actually looking at is not the same as the construction sector. And if we mix actually the data that we have in Cube, so KYC data, but also ESG data, with account information, maybe tomorrow we can have some sustainable finance. So it's all that mix that can be very complex, and I think we can discuss about it for hours and hours. It's more about how can we make some new business, some new use cases to help the Belgian economy or the European economy to grow further, and to be sure that it happens in the most secure way that we can do it, and with the right consent at the right time. So I don't have all the answers of the question of FiDA and so on. It's more about how to do it, and I think it's more with the ecosystem, and that's why the FinTech Belgium and all the other communities are helping us to move to the right direction and to be sure that we don't build a product or find a solution for only one partner, but for the community as a whole.
Thank you. Efficient. Thank you so much. Yuri from Mifundo.
Yes.
Came right from Estonia just for this.
I hope you can hear me. Yeah. So, hello everybody. My name is Yuri Ruhlmann and I'm a CTO in Mifundo. Let me start with a simple question. Why can American move from New York to California, buy a house, and get a mortgage without a big hassle? Why can't this simple thing happen in Europe? The answer is not that because the US is a single country, it's because it's an integrated credit scoring system. Unfortunately, this does not exist in Europe. In the EU, we have 27 countries, each with its own financial system and rules. Credit data doesn't move freely across borders. This is a problem Mifundo solves. Our mission is to break down these barriers and change how credit data is shared between countries. We want to help millions of Europeans who move or plan to move from one country to another, but can't get important financial services like mortgages or loans. Let me share a real example from our team. Keio, our Chief Product Officer, lived in Spain for 15 years. When she returned to Estonia and tried to get a loan to buy a house, the bank rejected her. Not because she had a bad credit, she was a branch manager in Spain, but because there wasn't enough data for the bank to understand her financial history. Her financial activities in Spain were invisible to the Estonian banks. This isn't just about one person. About 45 million people in Europe face the same problem. We talk about free movement in Europe, but real freedom means more than just being able to travel. When you move to a new country to work or study, you need long-term services like housing and financial products like credit. But the European credit system is fragmented. There are 27 countries, 50 credit bureaus, each work in their own country silo. There is no standard way to share the data or control or a central system to help banks to understand financial histories from other countries. On the other hand, banks need to complete credit information to make good lending decisions. This includes not just positive data, like ongoing loans and one-time payments, but also negative information, such as debts, defaults, or late payments. Open banking allows banks to access users' bank account statement. However, it's not guaranteed that users will share all their bank accounts. Moreover, bank statements only show previous payment behavior, and any unpaid debts registered, it doesn't show previous payment behavior or any unpaid debts registered with the credit bureaus. Knowing if someone has unpaid debts or a history of missed payments is crucial. Without this information, banks can't assess accurately the risks. At Mifundo, in addition to the other available data, we collect both positive and negative credit data from different countries. This gives banks a full picture of a person's financial behavior. We collect the data, but only with the consumer clear permission. We compile the complete financial history from different countries, including both positive and negative data. This comprehensive approach helps lenders to make better decisions. However, it's important to note that not all information can or should be withheld by consumers. Negative information, like unpaid debts or records of late payments, is crucial for accurate credit assessment. Allowing consumers to hide this data could lead the banks issuing bad loans, which will increase interest rates for everyone and defeat the purpose of sharing financial data. This is why we expect FiDA to balance consumer control with responsible sharing. FiDA gives consumer control over their financial data so they can decide when and how it is shared. But it also needs to recognize the need to share essential credit information, both positive and negative, to maintain trust and stability in the financial system. At Mifundo, we align with this balanced approach. We ensure that the critical credit information is available to lenders while still respecting consumer privacy and consent. One big challenge for the banks is lack of standardized credit data. Without standardization, it's hard for the banks to make reliable decisions about their customers from other countries. At Mifundo, we are not only retrieve the data from various credit bureaus, but also standardize it, analyze it, and create pan-European credit score. With just one click, customer can share the data to the banks, and banks can query about their customers over the API. FiDA's goal is similar. It aims to create cross-sector data standards to make sharing and accessing financial data easier. This will reduce costs for banks and build greater trust, especially when dealing with customers from other countries. We're already taking this approach in Mifundo, making it simpler for banks to access cross-border data. We are reducing the complexities in the credit assessment process, which is exactly what FiDA aims to achieve at a larger scale. One of the main benefits Mifundo offers to banks is a big reduction in credit risk when dealing with foreign customers. By providing a full financial history, including the negative data, we help banks to reduce the risk up to 7 times and increase the business volume by 15%. This just doesn't help banks. It also makes it easier for people like Keijo to get financial products they need without unnecessary barriers. FiDA is designed to support this kind of risk reduction. By ensuring financial institutions can access financial data across borders, FiDA can play a key role in lowering risks and cross-border lending. This fits well with the EU's goal of financial stability and protecting consumers. Our journey hasn't been easy, but our efforts have been recognized and supported by major European institutions. FiDA was awarded nearly 10 million euros by European Commission, European Innovation Council and European Innovation Bank to pioneer our service. We are the first fintech company ever to receive such substantial funding from EU. Typically, ESC and DAB fund groundbreaking sectors like space technology, quantum computing, biomedicine. While Europe has wealth, our financial systems are less efficient than those in the US, for example. Consumer trust is vital. FiDA emphasizes protecting consumers, ensuring data is handled safely and responsibly. At FiDA, we share the same commitment. We don't stop there. One of our missions is to educate consumers to improve their financial habits so they can get better loan conditions. FiDA is pioneering open finance. By giving people and banks access to cross-border financial data, we are creating more inclusive and connected financial system. We imagine a future where financial history follows you and you have the access to the services you need. FiDA provides a regulatory framework to support this vision. By promoting data-driven services, it will help speed up innovation in finance, and FiDA is ready to lead the way. In conclusion, FiDA and FiDA share the same goals: reduce the risk, integrate cross-border data, and empower customers with the control over financial information. Together we build the future of finance in Europe, where cross-border financial transactions are seamless, trustworthy, and efficient. FiDA is unique. We connect and standardize credit bureaus over Europe. With FiDA, the credit history can finally get a passport. Thank you for your time, and remember, FiDA, freedom to move, freedom to be trusted.
Thank you. That's a good example of how FiDA is going to improve the life of banks, actually. Can I ask the panel to come and take a seat? Thank you. Do you have questions? Because I have prepared some as well. But does anyone have a specific question? Yeah, Ken? I'm going to give.
SMEs, for example, and there, at least they would have to bear the cost of real development of the APIs, but what's the real cost? That's a complicated question. If the data user is a bigger type of company, there is this kind of view that there could be some at least profit made out of that data sharing, but that's very vague at the moment. And obviously, if it's the customer, it's free to accept that data because it's his data also. But beyond that, it's very complicated. And what we saw with a few discussions with clients is that everybody is actually wondering whether you will be able to make actual profits out of it, or whether it really will be fair, because you need to agree on what's fair also as well. And I'm really looking forward to what type of pricing they're going to be.
How do we maybe, because I was surprised not to see any point on the pricing in your in your slides.
So there is, like, I don't think I need to repeat what has been said. Maybe what I can add is that the compensation normally depends on whether there is a demand. So if there is a solution that's put in place and the costs are made, but there is no demand for it, then the question is whether the compensation will be paid. So that's a bit of a problem, I think, and the insurance sector.
Especially if you have, what were you saying, that you are going to share the data, and you have this project, it's going to be complicated to deal with that as well, with the pricing on top. Any other question? Yes.
Something which was not pointed out during the explanation of the text was the fact that FiDA also will introduce the concept of data information service providers, who will have to go through a special authorization procedure. Can you a little bit expand on that, on who could be that possible authority in Belgium, for instance?
Interesting question. I think JC.
Well, obviously, there's no designation already for that, but you would expect typical authorities within financial regulation to be designated, whether it could be the FCA, the LBB, or potentially other types of authority. But to be honest, I don't have a crystal ball, and it might be even someone else, maybe even the data protection authority would be associated with the process. I cannot tell, to be honest.
Any other question?
Thank you. So my name is Michiel. I'm part of Accenture, and I work mainly with the data holders in the scope of FiDA. Maybe, André, I have a question for you. So I saw a lot of challenges and risks with FiDA, and of course, I also see that, and your point is valid, of course. My question is more, how do you see the positioning of Assuraria, and maybe a question to the others, in actually proposing amendments to FiDA, and what is the role you see? What is also the impact that you see if you propose amendments? Because of course, I'm sure we can go a whole evening on the challenges and the implications of FiDA, but what can we actually do to still push amendments to the regulation? Thank you.
Yeah, so that's essentially what, as a policy advisor, we work on. So I work as a policy advisor. And so what we do is that we discuss all the different problems that we have with all the different federations, because Belgium is not the only country facing similar issues. And then we try to develop arguments that are quite strong, because if we're the more people in Europe support it, the better it is. And then we would propose amendments to the permanent representations when it's for the council, or to the MPs when it's for the European Parliament. And this is at this stage, because at this stage, the Council and the European Parliament are reviewing the proposal of the European Commission, who made the proposal. And then, once there is a position, there will be what we call a trilogue, and that is a bit of an informal process where the three co-legislators, the European Commission, the European Parliament, and the Council, will informally discuss, and they will make compromises. And there it starts to be a bit of a strategic game, because we're going to look at what do we want to propose, and what are we happy to give in. Because we see that as the insurance sector, we're facing different sort of, we have different interests than other groups in other sectors. Like the fintechs have different interests, the banking sector has different interests, and it's a more wider ecosystem than just us. So we're trying to align as well, but for instance, consumer organizations sometimes, because trust is really important for the insurance company. So if the consumer wouldn't trust us, I think it's the same for other sectors too, then there would be an issue. So we also try to see if we can align on certain type of questions in the proposal. Does someone else want to comment?
Yeah, exactly. Anyone else? Thank you. Anyone else a question?
Thanks a lot. Hi, Chris Andre from Global Council. Just a more very practical question. Let's say we get the trust of people and they want to share the data. How do we ensure that they actually do share the data? Because if they don't, then yes, it's a very welcome proposal. But at the end of the day, what? So, maybe for us it's obvious, the benefits are obvious, but it's called the EU bubble for a reason. People outside the bubble don't actually really care. How do we ensure that people actually give permission for the data?
Belgium, I know that when we were talking about GDPR, people were very cold as for the idea of sharing. Has it formed up? I don't know. I'm looking at the fintechs, but yeah.
So, in my opinion, the data sharing needs to come from the need, and I'm speaking about again my own company perspective. But for example, if I want to get a better loan, I will go to the next bank and I will share my data. If I go to the next insurance company, I want to share my data to get a better premium, right? So there is need to be some kind of need to drive it, and if there is a need, there is a way. This is my thought.
Sylvie?
Yeah, you were saying that we all know in the room why we should do it. I'm not sure that we all know why we should all give our data. And it's about finding the right need and the business incentive. And I think it's much linked to also the business model that you will create around it. Because we all know that once you have to give something, if it's your data or something else, you value it. So it's worth a lot of money, but there is no one who wants to pay the money that you're asking for. So if you want to have an ecosystem that works, if you want to have financial data access that works, then you need to find a way to make it happen so that the one that is giving gets something from it, the value, if it's money or if it's information or something else, and the one that will pay for it, that also have something in return. I think that's one of the challenges that we were saying, and it's a total other business model that is quite difficult to move because we always find a way of not paying. I think in daily life, we always find a way to have more information without giving the money. And that's one of the challenges. And it's becoming and finding the right business case, to find the right use case that will make a difference. And I'm sure that we will find some. We will have a lot of creativity to find a lot. But which one will work, we have to see. It's quite difficult, I think.
Yeah. Indeed. Thank you. And on the data, I have a question as well. We were talking about having a data dashboard for the consumers to manage the data that they share. So whatever, they are in an insurance insurer, and they see, okay, I have shared this data with this, that, and that platform, FiDA or someone else. Is the consumer or the customer ready for this type of complexity? I know that FiDA says that it needs to be super user-friendly, super easy, but do you think that the consumers are ready to manage all of that? Who wants to take this one? Come on, it's not that much of a lot to take it on.
The thing is that they may not be ready right now, although I'm pretty sure everybody in this room are willing to and understand that and how to do it and find a way. But there are these so-called, we call it daddy markets, like old lady from a country that never seen a computer in her life. So of course there are always be some people that don't care, don't have, and maybe there is very little data about them also. User friendly is another thing. It's like it's a matter of perspective and matter of designer who does it. So the companies who need to present the dashboard and never done it, of course they failed in the first phase. I remember a bank presentation of their mobile app from the generation 1 to now, right? It was like a day and night. So we probably see these things happening also. One thing I can think of is that there will be some kind of a data aggregators who have like brilliant UX and nice dashboards. I don't know yet how they will make money because the user won't pay for it. But again, if you have a big community or a lot of people, then there is a way to make money somehow also. Facebook, for example.
Someone else?
I think it's also about education. It's not about we knowing it, but the next generation. And I think if we all think all the secrets that we taught to ChatGPT, there's still a lot of work.
Anyone else? Yeah.
Thank you. My name is Wouter. I'm from Belgium. I find it a bit troublesome that Australia does not want to share its health data. In Belgium, we have hundreds of thousands of people who are unemployed, chronically ill, and it's weighing very heavily on social security. I don't know about other European countries, but you're connected enough to know and find out. It seems to me that if an insurance company does not want to share its data on which health protocols work and which therapies work, it's terrible for the patient or for the consumer who's getting returned money by the health insurance company for actually having no result and is getting more and more frustration. So my sense would be that if you make any amendment to health data, that it would be about effectiveness of treatments and protocols and so on and so forth.
Yeah, definitely for you. So thank you for the question, and I think it's a good question. So there are different types of data that are connected to healthcare situations, but when we refer to health data within the presentation, we think about the data where we have to write about, for instance, a health condition that we might have, which could, for instance, increase a premium. And we're not talking about scientific research. And scientific research for insurance companies, it's quite difficult to use it. It can be difficult because the reliability of that data is not always clear, because we have to look at the methods that are being used for the scientific research and see whether it can be used to assess risks and think about payouts. So it's two different types of data, and the one we referred to earlier was the first one. It's when we onboard for a specific premium or a specific product, and we have to disclose information about our own health status.
Isn't it up to the consumers then to decide whether they want to share this information or not, if they find it sensitive through the dashboard?
I think that the idea is to really protect the consumer here, because it's sensitive data that can also be misused. Mm-hmm. So if a consumer, and not by insurance companies because it wouldn't, there are safeguards there, but maybe by other actors. So I think it's good to really protect the consumer there.
Anyone else? Another question? I'd like to go back to the timeline, because we were talking at the beginning, so we come from open banking, we're living it, and we were talking about open data, but as you said, we are not at open data, we are at open finance right now, where we have the data that we're going to access. The fee is financial.
Indeed, I mean, we've heard your point of view. Should we go a step further and faster to open data? And aren't we already too late compared to the rest of the world? Who wants to take that one?
It's a very delicate topic because obviously the data that are being handled are not typical data. And as you can see with the European legislators, that they want to do it the right way and they want to be cautious. We're talking about accessing health insurance data, for example. As you mentioned, it's to protect customers that it's being excluded to some extent. And actually, it's not just health insurance data. We're talking about risk profiling for clients, consumer credit, for example. And so I think everybody is mindful of the fact that this could be a huge impact, but there are huge risks, and the willingness of the legislators to avoid any type of exclusion for consumers in terms of credit, in terms of health insurance, for example. And that explains also why maybe it's going slow. To provide an international perspective, I think Australia has been a step further, as they've already been implementing somehow an open finance framework, but it's a bit different. It's about just customer-centric, and they grant permission to share data on all types of data spaces. Although right now, actually, they're going a bit backwards, and they are starting to restrict a bit the access. So is it going not fast enough? To be honest, it's complicated to say. And there are always high stakes with EU regulations. So I think the financial industry will always feel it's going too slow, but to some extent you also need to balance that with the risk for consumers.
Anyone else?
Yes, I think we don't necessarily go too slow, but maybe we can shift a focus also to cross-sectoral data, because it's for the insurance sector, it's complicated to actually put in place FiDA, because in every single country there are different regulations around the products. It means that if I have a health insurance or maybe a house insurance here, that house insurance can be very different in France, and it can be very different in the Netherlands and other countries. So if we want to create APIs, we have to adapt it to every single product that's there. So it's a very difficult exercise. With cross-sectoral data, it could be easier, and it could have also different benefits. So maybe the focus could be on both sides, financial FiDA and also cross-sectoral data.
Judy? No? Anyone else a question? Come on, no, let me, thank you. Just ask me the hard questions on my own. Thank you.
Thank you. My name is Joanna. So I'm trying to get my head around why FiDA is going to reward data holders, so take a bank or an insurance company, instead of going to reward the end client. Because there was this concept, I think that you said, Jean-Christophe, of customers having customer pods, owning their own data, and then being able to share it with various industries. Because if you think about it, if a customer that has data in finance will once, let's say, provide access to everyone in finance, would be simpler from client perspective for it to be customer-centric instead of industry-centric. What my question would be, don't you think that it might just open maybe an unfair competition where some startups or some actors would come into place just to manipulate data to get the value, to use it, instead of making it for the client?
I think it's regulated, but I'm going to forward to you.
Just actually quite a practical question, so I'm still looking at the other speakers here. I think the matter of competition is very centric into the regulation, and that's certainly one of the main goals of open finance. With open banking, that's what they try to achieve, also open up the competition game. And that's certainly what they're still trying to achieve as well with the FiDA. But at the same time, they also want to create trust for customers. That's why there is also the creation of data permission dashboard. Whether it creates unfair competition, well, I think there are challenges. Hadwig also mentioned that for insurance companies, it's hard to implement and to actually leverage that. So that's first point. Second point is willingness of the regulation is to create competition on the merits of the products and not just merely on the fact that you're sitting on a pile of data. One of the provisions in the regulation is about whether gatekeepers, so big company, should have access to this data, or whether they should be banned from accessing this data or restricting their access. So I think that's interesting, but you can see that they would say maybe it's too much powers for these types of companies, so maybe we should restrict this. It's still provisional. We won't know whether it's going to be implemented and whether it's going to be a ban, a restriction, or no restriction at all. So I don't have practical answer to that, but I think there's a interesting point to keep in mind for that.
I have a couple of points actually. One of the things is that although the customer or consumer will have a dashboard to see the data, see who it was shared to and get access to it, the fact actually is the data belongs to the company who has it. It holds the ownership today also. It's just the way how the consumer can see it. This is additional value. And second thing about the aggregators, for example, I don't believe that in open market situation there is one big aggregator that gets all the data and hawks all the profit, because the financial data access would be similar to every actor, right? So if somebody will try to hawk all the money from there, then there will be 10 or maybe 100 companies trying to do the same, and then the competition will lower the prices. So, yeah, these 2 points I have.
I would maybe add the fact that actually as an end user, you get rewarded, but in a different way. It's not about the money that you will get back from the data that you're sharing. Don't have to forget that all the banks, the insurance, and to make FiDA happen, there are a lot of investment that need to be done to be sure that our data doesn't end up just into the wild. So that's why they are the actors that are getting financially rewarded in FiDA or in the next business model that happen. And I think for the end user, the reward is more like making better decisions or having better information and being sure that their financial data is secure. So it's different between having the money than having another benefit.
Yeah, and when we see PSD2, the quality, one of the challenges that we see was also the fact that PSD2's connections were not stable enough, were not developed enough. The customer service wasn't always there either, and this way it could maybe prevent this kind of challenges as well. So I think it's not a bad thing, especially when you see how much they have to develop and how many actors have to develop, and if they have to develop also a dashboard. That's going to be another challenge. A last question. Yeah.
Hello, my name is Enrique from the association that represents the credit bureaus that were mentioned before. We are coming to the end, so it's going to be a little bit of a more difficult question. Perhaps, and Christoph, we can respond to that. In the original proposal of the European Commission says that data collected for creditworthiness assessment is out of the scope, it resides on 9. And that idea has sort of got hold in the Parliament and in the Council. Now they have taken it to the articulated text in Article 2 or 3, I can't remember. So they are saying that the data collected for creditworthiness assessment is out of scope. And I was just trying to understand What is it that you think about that? What is it that comprises data collected for creditworthiness assessment in your view, or in the view of anyone that is in the banking sector? Because one of the things that the bank would collect immediately from a consumer to assess the creditworthiness, in addition to personal information and means to verify your income, for example, salaries, etc., is existing credit agreements and obligations arising from those. So is it, or is it out of scope loan data?
That's you smiling.
Thank you for the question. And actually, this really underlines a lot of questions we have about the scope of data that can or cannot be collected. As I mentioned, the goal is to avoid any type of banking exclusion for what is considered to be an essential financial service, access to credits and financing solutions. I'd like to tell you exactly what's the goal of the data that can be collected, but I could be right today and wrong in the next version of the text. So, to be honest, I'm not willing to answer that question now, but I'd love to tell you once the text is adopted, because it can really change. And as you can see in the discussions, it's really going fast into yes or no, as you mentioned yourself. But that's a very good question, to be honest.
Anyone else wants to? Okay, this one was a short one, so we can still have one last question. Yeah, yes.
I don't know really who to address to, but we remember from the PSD2, at least my prophecy was the incumbents were to be the biggest users and look for opportunities in PSD2. How would this play out in terms of FiDA? Maybe it's Arabic.
Thank you. I don't know. You don't know? You don't want to answer? Anyone else?
Do you know?
It's just a question. Are you looking for opportunities in FiDA or just playing defense to not share?
Do you see the opportunities?
Do you want to answer?
Still not.
As I'm a little bit more neutral in the discussion, and maybe it's, I think that everybody is looking into the opportunities, because it's like in PC2, I remember that all the crazy ideas and the very, very interesting one, I think that very nice questions and innovation were put on the table. Unfortunately, I think maybe 90% of the good ideas that I saw haven't been implemented. So in FiDA, it will be the same. Well, I hope that we still have a lot of creative ideas, and maybe new business opportunities will be created without killing a whole sector. So I think each company sometimes see the opportunity and then 10 minutes later see the risk, and they go back and forth. And I think that will be a play for still a few years. And it's the best ideas and the best business cases that will come out. But I found it very interesting conversation, because they all go back and forth. It's a good idea, let's do that. And then they say, okay, maybe not, because this can happen. And it's very human. But I don't know how you look at it, if you have the same feeling or if it's more defensive.
Well,
or maybe not.
Do you think?
I understand that you don't. So, in general, I see this kind of thing happening right now is a progress. And basically, we shouldn't stand in the way of progress. I would rather ride the wave. Is it, I'm pretty sure a lot of ideas won't be happening, and it's a usual. In every business, first you think of something and try to do it. It's just another opportunity. There will be a lot of opportunists, and there will be a lot of failures. But I understand that the legislation is delaying and looking for the ways to one way to create the opportunities, another way to minimize the damage that it could bring.
We
I'm going to finish on a positive note. I think that's what we've seen with PSD2 is as well a lot of collaborations between banks and fintechs. We had at the beginning, of course, the banks completely on the defensive, and it was natural. They had to develop, I remind, for free all these connectors. And and there was this feeling of it was their data, no, it's our data as customers. So it was also a new concept. Now, this concept is already agreed on and assimilated, I would say. But what we've seen is that the banks have also taken also a lot of partnerships with fintechs. They've seen, for instance, I'm taking Mifundo, but typically, Mifundo is a way of mutualizing some costs that would be far too high for any bank on their own small market. And this way, you have one fintech mutualizing, and I'm looking at you, it's the same thing. So there will be opportunities. You might not see it now, or they might not see it now, and it will come with time. So positive message, I'm sure. I'm going to invite David, our new CEO. For his presentation of FinTech Belgium.
Yeah, thank you.
Very good. Yes, but don't go away because I would like to have a picture all together.
Hi, so thank you very much, Alessandra. I'm the new CEO of FinTech Belgium. Those who don't know me yet. Oh, clicker. Trust we're going to test my coordination now. So it's a bit of a graveyard shift. I only have 212 slides, so don't worry. But great topic, really interesting to get the opinions of different actors in the sector as well as different perspectives and different backgrounds. And I think what an interesting topic and what an interesting opportunity for the fintech sector, but also I think for the European consumer to have a better offering within the financial sector, and hence, at the end of the day, better prices. Anyway, moving swiftly onwards, who are we? For those of you who don't know us, we're the sector of fintechs active in Belgium. Roughly 75% of our members are Belgian, 25% are non-Belgium, and this is a bit due to our position, of course, of at the heart of a Euro bubble, and as a great place to do business. We have 122 members and 27 corporate partners. Members are fintechs, and the corporate partners are partners who enter in contact with our ecosystem, either as clients or as suppliers. You can discover all our members, well, not now, because there's nowhere I can click, I guess. And our aim, since we created in 2016, is to promote, federate, animate, incubate, accelerate, and enhanced talent. I just threw in the enhanced. We have values, which is good. So we're a non-profit organisation. We are by our members, for our members organisation. So my boss is Yuri and Sylvie and others. Our values are integrity, innovation, transparency, competence, and being customer-centric. Everything we do as an ecosystem is to benefit and to help our fintechs grow. Our strategy relies on 4 pillars. Basically, we do a lot of matchmaking. So the 4 pillars are talent, liaising with universities, helping positioning fintech with our great brand as FinTech Belgium as an obvious career choice for the most talented young people out there. Demand. We're here to make sure the fintech sector booms, be it B2C, towards the banks, towards the insurance, towards corporates. Yeah, we're here to take over the whole economy, basically. Capital, of course. A lot of our members are a product-based company, so they need lots of money to invest in all these great new products. And we match-make them with different investors, be it VCs, private equities, IPO, well, hopefully, if Euroclear is time for the invest. And, of course, policy. Policy, we're here to defend the sector, not that anyone's attacking us, but we're here to speak to the different regulators, the public authorities, and advance our agenda, which is an agenda of, as Yuri, I thought, did a great job putting it forward, of transparency, enhanced competition to the benefit of the consumer, basically. Next slide, please. We organise a lot of events. It's not the only way we make the magic happen, but it's a big way. Like today, we have a special breakfast. The next event, is a special breakfast with Invest in Hong Kong, because at FinTech Belgium we think big. We want to take over the world, and starting by Hong Kong. So, Jean-Christophe, you have an office in China. You need an office in Hong Kong. You need to come to breakfast. Then the next event after that is a webinar with Professor Rudy Arnault, who's a bit of a superstar. And the reason we did this webinar is it's all about helping our startup scale-ups access capital, access private equity funds, so I'm sure we'll be swamped. On the 15th, we have another meetup, which is in Vestelbergen, which is outside the Euro bubble in Ghent, next to Ghent, and we'll be having an embedded finance meetup with FiDA magazine, and this is a great topic, and also with the idea of helping our fintechs who sell to corporates get into contact with their client target. We have 2 other breakfasts planned on the 8th and the 22nd, so if one of you guys are members or want to become members and want to pitch your amazing solution or your partners with Pragmatic, make sure you come and speak to me and we'll book it in for you. We have a webinar with Scalac, who's another of our amazing partners who will invest in software development. And then, of course, the event you've all been waiting for, the Digital Finance Summit. So forget Saint-Nicolas, Sinterklaas, it's over, it's finished, it's now the DFS. DFS, you can scan it. I've scanned it earlier on, and it works. Shall we try? Let's try. And does it scan?
You have your head there.
Yay! It does. It scans, it works. And so it's a real QR code provided by BUM. No, not really. So you've got to be there, 800 attendees, banks, insurances, obviously the fintech ecosystem, Belgian companies, Estonian companies, all sorts, 100 speakers, loads of visibility opportunities. We're discussing enabling sessions with banks too, so it's all going to be happening. And of course, our very nicely or cheesily, I'm not sure, named FinTech-tastic party. So yeah, because that's the DNA of FinTech Belgium, is we like business, we like socializing, and we like to have a bit of fun too. We also do thought leadership. We're very, very busy. We came out with a barometer about, I should know it, shouldn't I? The state of AI within the financial services, or that's roughly the title, and of which you have copies. We've only brought about, I think we have 10 copies available because we're all out of print. So there's been such a huge demand for it. That's all we had left. And then we're also in the process of writing an ESG report with our main partner, Accenture, where we'll be talking about the great impact our fintechs are making on environmental, also social and governance issues. Yes, I know what ESG stands for. And then the next slide. I should stop making stupid jokes. Yeah, talent. I was telling you about, we have a great job board, as you can see, loads of jobs on it, 1,950, and these are all the jobs of our member companies, and where young talent, or not so young talent, can find an amazing career within our fintech ecosystem. And of course, this is all thanks to all our partners, main partner Accenture, of course, very grateful to Osborne Clarke for hosting us today in this amazing venue, and then all the other corporate partners. And I think I'm on the last slide.
Yes, you are.
Marvelous.
So we are going to go for a drink and some food, but before we do, I would like you all to join me because
This big boy, his birthday was last
Happy birthday to you.
Happy birthday to you.
Happy birthday to you. Make a wish. Woo!
27 today.
Yes.
Je pensais qu'on allait repartir.
For the